Kevin Hincks, co-host of Fast Markets, here live from the CBOE, and we were talking about more news on tariffs, in this case chips and Apple. So bring us up to date, Kevin.
Good morning, Nicole. The tariffs are in effect for basically 69 trading partners. We said the high was between 40 and 41% for the high level. Well, it's more now, right? Because President Trump continues to put pressure on other countries to come to the table or work on things like chips, right? Chips have been a big discussion topic for the Trump administration now. Part of why Apple is rallying, because they have exemptions from the tariffs on the chips. Why? $100 billion additional investment in the U.S. Now that makes $600 billion. As you know, Tim Cook was at the White House yesterday, although the rumors are there was a parade of CEOs at the White House yesterday. So all these things, as the tariffs take effect, still very quiet from Canada. India, that relationship seems to be getting worse, not better. So all things considered, we're absorbing all this. The markets seem to be very comfortable with the tariffs taking place, fueled by Apple, which is in 3 of the 4 major indices, having a big rally, another rally today up pre-market on the exemptions from these tariffs. So, the final decision on tariffs has not been made yet. We're moving into a new chapter, and off we go, Nicole. Let's see how this all plays out. I have the feeling it's still not done. However, as of this morning, as of midnight last night, the tariffs are all in effect, Nicole.
Yeah, I loved watching Apple. I loved watching Tim Cook yesterday. He was somewhat giddy. As the president described him as a genius, and Apple bounces back today, and having that exemption because they moved so much production to India and then doubling down on India tariffs, you start to scratch your head and say, oh, they moved there, but they got that exemption, so that was good news. So the stock is higher by about 2.5% today, but the recent high, the 52-week high, was 260. So we'll keep an eye on that. How about the weekly jobless claims? We go back to the economy. Where do we stand there?
Yeah, we got some good data points at 8:30 Eastern time this morning. First, jobless claims. First-time filers for unemployment insurance, 226,000. Now, that's 8,000 higher than last week, but as you know, anything that starts with 220 is indicative of a strong U.S. Market. So that is good news for the overall economy. Then we got productivity and costs, which measures non-farm productivity, which jumped from negative 1.5 to up 2.4%. So productivity higher, unit labor costs, an inflation metric, down from 6.6% last month when we got some crazy numbers to 1.6%. Both those numbers higher in non-farm productivity, higher than expected, and unit labor costs lower than expected. So good solid numbers there on the economic data this morning. Like I said, Nicole, earlier in the week, it's a light week for economic data. Good for earnings, still fairly strong numbers, but very light in terms of top tier economic data. But these numbers this morning, all positive.
Yeah, and look, continuing claims ticking higher. Right, it's more than the estimate, it's more than the prior, it's getting close to 2 million. You don't necessarily love to see that because that means people are out of work longer. But after that jobs report, I think this is a fine one. After what we had to deal with last Friday. Some thoughts on what's going on in treasuries. We've had the 10-year bond yield auction. Today we have the 30-year bond auction. That'll be at 1 p.m. Your thoughts?
Yeah, the 10-year note auction yesterday didn't go well, right? As the U.S. is really focusing on shorter term notes and products to finance the term. Because why? They feel that in the long term, rates will be lower than they are right now. So the benchmark, the 10-year yield that we got yesterday was average to slightly below average in terms of the quality of the auction. Today, 30-year bond auction, that used to be the main financier of debt. It's less than it was before, but as rates get lower, the U.S. will probably finance debt for much longer period. So, yeah, the 30-year bond auction, we'll keep an eye on that again today. That'll be a more indicative of the overall economy. You know, the 10-year and the 30-year, those are the two biggest views, even though right now the U.S. focusing on a lot of short-term debt.
Yeah, absolutely. And look, I mean, we have up arrows here today. We're back to climbing the wall of worry, or just, the path of least resistance still seems to be the upside. I'm going to get to Jenny on some hot stocks to watch here, but any final thoughts, Kevin?
I just think, we don't know. There's still a fair amount of uncertainty about what the tariffs are going to mean. And I still think with a light earnings week and a light economic data week, we are still a headline-driven market. So these gains that we have this morning, one headline can take them out. And this is a very low eyeball part of the calendar year, as you know, in terms of people watching the market. So, yeah, I think the markets are a bit thin, low volume, and I think you should watch for any headlines to move the market. That's what we have, in essence, right now we're a very headline-driven market, Nicole.
Kevin Hincks, great to see you there.